Hey, what's going on, guys? This is MC Fire tapping in with you guys again. Love it, love it, love it. So we're coming live due to popular request. We might stay through the open, might cut a little early. It just kind of depends on if we get through everything we have to talk about today. Got quite a few in plays, but really the landscape of the overall market and what's coming out. So I don't know if you guys are tracking what's going on in the news, but the one of the new administration's new departments that they're creating, the Department of External Revenue Services, um, that department is supposed to be starting up tomorrow. And no, it is not an April Fool's joke. There is a new department that is starting up, External Revenue Services, based off of, I guess, implementing tariffs. Now, the idea is I guess the goal of the administration is to see if we can generate some new revenue from tariffs, creating tariffs on countries that we feel like we're being mistreated by. And so, if anyone knows anything about tariffs now, because we're all kind of finding out together, some of us, is tariffs are essentially a tax. It is not a tax paid by another country. It's a tax paid by your own consumers, right? If imports come in and the government says, well, I want our local countries to compete against countries that are external, we would pay that tax, right? We would pay the additional tax that's put on by the government at the point of sale, okay? And that typically is something that the company could pay, the company that could pay that tax, right, for doing business with an outside entity. But most of the time, they pass on that cost to the consumer in general, which is why we typically pay the tax. It could be in the tune of 25% in some cases. Now, what is my thought on that? What is the likelihood of that actually going forward? What is the likelihood on the U.S. economy? What's the effect of it, right? There's two things that are in play. Number one, if you look at the first uh, presidency of Mr. Trump, instituted tariffs right in 2018, the market did actually take a dip, but actually made a very strong V-shaped recovery. And that's kind of what I'm anticipating for this new one, and for a couple of reasons. Let me kind of walk with me here, because we can look at the charts all day, right? We can zoom in on the cues and take a look at what's going on, but what is the macroeconomic aspect of the markets, right? If we go let's look at the ES really quick, right? And then let's say we'll minimize this for a second and we'll maximize 2008. I think we can maximize this guy. We'll do that. Maximize all cool, right? So essentially, 2018. I believe this is covered, right? Go back to 2018. Around this area right here, this spot is the Trump tax cuts, right? Or the tariffs. So as you can see, how the market took that, right, during the period of the tariffs was followed on by what some classify as a recession, a great fall, all this other stuff, right? Tariffs hit the economy, market doesn't like it, but then what happens? Nice recovery, right? Now, it's not just about the market. What's really the underpinning of what's going on? The underpinning of what's going on is things are just getting shaken up. You don't really know which companies are going to be affected, what prices are going to be affected, what services are going to be affected by these tariffs, right? Canada, for example, one of our largest trading partners, a lot of the goods and manufacturing is back and forth goods between the country that we live in and the country to the north of us. And so, as each component of maybe aerospace or automotive or energy needs to be manufactured, there's specialists in both countries in certain areas that you just keep sending your product to in different stages. And so is it one-time tariff for that in product, or is it a tariff each time it crosses the border? Nobody really knows these things. So while we're figuring these things out, there is going to be a period of this kind of choppy turmoil, and then once it all gets figured out, because things are things, there's a recovery, right? And the market kind of continues. So getting things at kind of a discount, you notice a couple of opportunities to buy a 3 ATR here, 3 ATR there. Would also been a really good spot to buy. We'll fast forward here. Moving right along, we haven't really got down to 3 times average range on the sell, but we have taken a pretty drastic dip, right? Pretty insane. Well, in the tune of 10% for sure. So now, why am I bringing it to the front of the classroom now? Because I think a lot of it, I'm not saying that all of it's priced in. We could drop at least down to 3 ATR. Probably maybe even another 10% is what I would be anticipating. When you look at the numbers, right, in tariffs, and you look at how the U.S. Consumer as well as producer is situated, most employees, if they're getting laid off, what we have in our economy as opposed to other economies is the ability to get another job somewhere else that's hiring. We also have a very a multi-dimensional skills-based system, meaning you yourself listening to me probably have more than one skill. You could, you have a primary skill, your job, but you've already probably carried on a few jobs in your past. You could also go back to some of those jobs. You could also learn a new skill. There's AI out here that's teaching new skills. You have community college, traditional college, or just good old fashioned YouTube University to learn a new skill. Get out there and be multidimensional as regards to a worker. It's not like you're in Kazakhstan where they're saying, "Hey, I'm a goat herder because my father was a goat herder and my son's going to be a goat herder." And if the country bans goat herding or the economy goes under, you don't have another skill, right? Um, this is not that. So I believe that the U.S. economy will be in flux a little bit, but I think we'll recover. This looks very similar to what we saw in Trump 1.0. Then Trump 2.0 will probably be the same. Again, it's not political. It's literally looking at the data, looking at the charts, and coming to that factor, right? You'll also understand too that people are listening to what is being said, and they're putting their money where their mouth is, right? If the government has said this is basically an inflationary narrative, prices will go up, right? So to protect purchasing power, people are purchasing gold because they also believe, okay, in the short interim, we don't have the manufacturing base that we used to have. So you're gonna have to invest in that. And where are you gonna get the money? Everyone keeps asking where you get the money for everything else. This is gonna be the same answer. Where do you get the money to invest? Well, you're gonna print it out of thin air. That's exactly what's gonna happen. So this is reflecting that. This is reflecting, hey, this is inflationary narrative. You're gonna be printing money. Even the price of silver there is kind of peekabooing highs a little bit. So it is something to watch, really. Really something to watch, seriously. All right, moving on to some of the in plays. So I hope you guys gain value from my perspective. Like I said, I don't know if it's going to play out that way, but I do believe that a V-shaped recovery is in the works because of the things listed. Now, does that mean we go to all-time highs in a very near future? Well, no one knows, but I do think that people are sitting on the sidelines waiting for um, these tariffs to kick in and seeing where you can find what's affected, what's not affected, this chaos where you can find value the fastest. So be looking for that. One thing I would say, blue chips are definitely on the cheap right now. Took some buy bias trades in some blue chips, right? Just went on and pulled the trigger on a few of them. Setup or no setup, went on and pulled the trigger on a few of them, right? Just wanted to make sure I did not sit on the sidelines no matter what happens, buy signal or not. Just get in because, hey, I'm willing to accept the risk if you take a 10% drop, right? I just think it's beautiful that we get a 10% drop, and I get to take part in a purchase here. So that's really the best thing. And but there is clearly some in plays, and then we'll bring this from the classroom. XLRE is one of those for sure. It isn't a downtrend. You get a buy candle here. So if we trade below that 41.45 level from rotation to rotation, it is roughly a 1-to-1. So you could say, well, the trigger is down here to execute the trade, But if you are determined to hold through to 39, I would say that's a little bit more acceptable risk to reward. But really, we typically won't do anything less than a 1-to-1. So 1-to-1, this is right at the cusp of what we're looking for. Also, AO is in the same boat. They're just the other way. We'll bring it up on the weekly here. O, relatively new within the last month or so. Relatively new uptrend, nice push away. So with this rotation, it's kind of at the top of the rotation. What we want to see, this is now the daily, what we want to see is a slight pullback to get the risk to reward a little better. If you notice here, this is really the trigger back here. You got a red and an uptrend, and then the next day crosses bubble high, stop out would have been low, a break of that rotational zone. So, looking pretty sweet. Microsoft on the list as well. Kind of bouncing off of this support level here. Shout out to the technicals. Shout out to Darwin. And then, so we'll keep moving because it is in a downtrend. We will focus on things that make sense, right, in place, in the right direction. So if you're buying against the grain, this could be a reversion to the mean, right? We like to see a little bit of sellers that get caught late unwind their position at around the 3 ATR mark. That's kind of the playbook that we have established. Then you've got Diatrace, DT, ticker symbol. On the daily, you got, again, another red candle in the direction of the trend, just indicating to us momentum and continuation, already been over Amazon. Another big one that we want to bring to the front of the classroom that's really been pushing, showing a lot of strength here is PM at 3 ATR. So things that are going against the overall market are things to bring to the front of the classroom. If the market is in a downtrend, SPY, the Qs, the Russell, right? What is bucking that trend? So, what's recession proof, right? Philip Morris, PG, Procter and Gamble, right? Kind of treading water here, Procter and Gamble. But you're seeing, if you bring Procter and Gamble to the front of the classroom, right? It's treading water, but now you're above this level in this new rotational zone. So just kind of watch out for that. You've got, I didn't want to skip over some of these TMO to the downside here, just kind of continuation there. UNP also to potentially, it's in a downtrend, and we see a potential play to the downside, right? So we're going to put an alert below this level, and as you know, we have a very basic system, very tradable system now. The only difference is this is, as you can see, very rotational. I'll expand this out a little bit. So it's something to consider. Really, you'd be taking this down to where the rotation is, right? If it tracks below. So it's essentially still like a 1-to-1 look when you think about it, except you risk accordingly, right? Set your risk accordingly. This is currently in a downtrend, and Pepsi hasn't been doing so good. You'll see that it kind of tested the 21 moving average, kind of reversion to the mean kind of deal. But notice here, double bottom, higher low, and it's advancing. So you just kind of watch for that. The move down might have already been priced in. And the move down, there was actually two opportunities for the move down for PepsiCo. You got one here, stop out at the high, absolutely punched down around earnings. You also kind of get the same thing here for a nice two-day play and another 2-day play there, right? Remember, we tell you guys our plays typically last anywhere from 2 days to 3 weeks. So if it's pushed to the danger zone, typically that's what you're looking for. So a lot of times we just get them for 3 weeks. Oracle, another one that is absolutely bucking a trend, very much like Philip Morris. Kind of blow up candle here, so watch out for that. If you look at the weekly, 3 ATR, nice blowout candle, strong uptrend. This is kind of what you want to see in a recession. So if you see this and you see the market is tanking, stuff like O'Reilly Auto Parts and Philip Morris, things that consumers are still going to probably need. They're going to need parts. They're going to get their consumer items. Things that those things is good, right? There's opportunity to buy here for sure. A couple of pullbacks, no real outsized candle to kind of key in on. But if you're averaging in, shout out to you, there's an opportunity to buy there as well. Those earnings out in the open. So we already talked about talk about now. Ticker symbol NOW, service now. And downtrend, with some resistance here, kind of at the pivot level. So nothing really to write home about there. Mo here on the charts, and the reason why, if for those, if it's your first time here, the reason why we have the other candles grayed out, and we really want to focus on the highlights, is because we're not really concerned about the overall, just the ebb and flows. We want to really we want to really focus in on the outside players are really getting into the market. So that's why, these are up and down candles, obviously, but these ones with the outsized candles, when players really want to step in, like right here, we really like the tight outside candles, really the narrow range outside candle bars. And the more potent the outside candle is, the more vivid the color, right? You can see this green. It's a little bit different than this green. Well, that's because this one, a lot more participants happen as opposed to this one. So we just want to bring that more to the front of the classroom, and give relative strength its place to shine, right? We also have MA. You got MasterCard here. We'll start on the weekly. It is an uptrend, so financial service is not doing too bad. What you'll see is most of the data shows that even though productivity has increased, incomes haven't necessarily increased, but the spending, right, has been augmented by credit cards, right? Credit cards. People aren't really accepting to live below their means. They're kind of, buy now, pay later kind of deal. So because of that, you're seeing stuff like MasterCard and the other major financial companies, excuse me, major financial companies, kind of push through that and uh, be just fine, because the consumer needs help, right? They need a lifeline. You got Johnson and Johnson. So Johnson and Johnson, also one of the consumer items in an uptrend. When you need, baby formula or whatever else you need, you're gonna have to go get it, no matter what the price really is. So they're still competitively priced. But we traded. What I bring to the front of the classroom is our system works up and down pretty effectively. If you notice, Johnson and Johnson was one of my favorite trades this year. It rallied right outside candle here as it the trigger, as it closed, went below the low of the outside candle. Was able to roll it 4 times and close it before the next rally. It didn't eventually continue down before changing trend. So the system works really good, and it had kind of been in a little bit of a trend halfway through there, but we identified the trend. First opportunity, we took it, and it was very profitable. So is there opportunity now? Well, it did revert to the mean, well, the 8 period moving average to be specific, and they started reacting off of that. So we'll just wait for our pitch. That's really kind of what we do. IBM actually threw a pitch here, going into squeeze, but never really fired off. Now it did go up 3 days, so if you did take that trigger, you did see a 2-day rally. That's what we kind of we see on this channel. 2 days to 3 weeks. That's what you're looking for. Nice good old Google. Google to the downside, but a little bit more. We have an OCO out for Google. If we can, because where it is, let me show you. Bring this in front of the classroom. So we don't want to be necessarily a dick for a tick here. If buyers want to step in right here and it's close enough to 3 ATR, cool. If it gets down to 3 ATR, we'll probably just buy more, right? So if we're looking for a break above the high of this candle, to go ahead and take that. We have an OCO out for that, and yeah, loving Google and an opportunity to take a purchase there. GE, little similar story. In an uptrend, buyers are stepping in. We do like to see stuff like this. Nice little hammer candle with buyers stepping in, and a nice continuation. We might actually add that to the playbook. We'll actually screenshot that, and then we'll look to see if there's more of them like that. I've been noticing, like right here, right? You have a green followed on by a red there in the direction. You have a red followed on by a green in the direction that you want it to go. So as long as, let's say, the green is inside of this red, maybe that's still a continuation, right? But here it's very clear. Buyers, and then a seller right after that, you can almost guarantee it's going to punch to the downside with that follow on there, almost. And you have a tight risk reward if it doesn't. Duke Energy, a nice opportunity to buy right here in Duke Energy, relatively new uptrend. We'll actually bring this to the front of the classroom for you guys to see. There's definitely been some opportunities if you guys had the system, had it on your scanner, to take advantage of some of these things that were given, right? I mean, it's pretty straightforward. I don't see anyone else having a system as simple as ours, as repeatable as ours, and as tradable as ours for you just waiting for the right setup, right? So here you got essentially an uptrend. Now on the daily, it says, hey, the moving average just kind of crossed back here. On the weekly, took a little longer to cross, right? If we zoom in, you'll see where we're at. Yeah, so this is the first time, so no worries. But essentially, you're kind of getting close to that. It's about to cross. So you see it pull back here. There's your trigger. Nice follow through, right? If you're looking on the daily, it's already crossed at this point. DLR to the downside, and slight catching resistance. And we've already talked about a couple ones that look like that. We're not going to harp on that too much. You also have Dominion. Now, Dominion, as I'm not sure if we brought this to the front of the classroom, but let's bring this out. Relatively new uptrend, but what I really want to bring to the front of the classroom is rotational zone. You're getting at the base of this rotational zone. If we can get a break above that trigger, it's actually something that you can go ahead and take with your stop right here. If you trade it up to the first bit of a high, it's roughly a 1-to-1. Really, we're aiming for the rotation to give you that maximum risk to reward. But first sign of danger, make a decision at the 1-to-1. That's kind of how we'll play it. You guys play it however you guys like. But we want to share with you guys the plays that we see that we probably can take. CTVA, pretty straightforward. I mean, you see it. It is an uptrend. There's a buy. Breaking above, I believe, previous week's high as well. Shout out to the previous mentor. So, yeah, it did break above previous week's high and above the 8-pair moving average. Is it in squeeze? It might be. No, it's not. But momentum is trending to the upside, so respect it. Really, really respect it. Coming out of this, kind of makes this range, and if it wants to break above that for you breakout traders, I guess you can classify us as breakout traders. Then yeah, this would be a good look for a CTVA. Something we probably need to put on the alert there. We'll put the alert there just in case because this is looking a little too juicy. It's a little too juicy. Charter is one of the ones that we really liked this year. Absolutely crushed Charter Communications. Crushed it twice, actually. If you go back and look, we did really, really good. But I'll bring it to the front of the classroom here. Took the buy. We've talked about this quite a few times on the channel. There's your system, uptrend, red candle, tight, very tight red candle. Too juicy for us not to take. We actually took a buy and we took a butterfly. That's another thing you guys can do, right? If you guys want to average in a higher percentage, you don't necessarily have to average in a higher amount, like put more money on the table. You can actually put a more riskier trade on the table, like a butterfly, right? And it's a good way to risk less, but have a higher potential for reward if you think the stock will really move, maybe even a straddle if you think the stock will really move, right? So it's just a way to, instead of just buying pure calls or whatever, to limit your risk, meanwhile adding more potential juice to the trade if it goes in your favor. If not, your trade risk was, defined accordingly. But as you can see here, new setup, sold into a very tight moving average. And so that's kind of what you want to see. Nice hammer there on support. So if it, trades above the trigger, guess what we'll do, right? Same thing that was done here. Triggers above, nice rip, target highs, easy day. If it's making higher lows, right? There's a low, higher low, higher low, and we see this start to push, then you could be setting up for a nice SNA triangle, maybe even a channel to the upside, right? So Charter, we've been doing pretty good with that, and we'll continue to look at that as long as it presents itself as an opportunity. Good old Berkshire, they're looking very strong, right? Obviously, Warren Buffett buys good companies. He doesn't buy short-term trends and meme stocks and stuff like that. So in recession, that's kind of how Buffett looks at a company. He looks at it for primarily the moat. How hard is it to replace this company? If it's very hard to replace, then even in a recession, you're going to need what that company wants, and that's exactly what Warren Buffett buys. So that's why Berkshire, as in a way, a flight to safety, because people just know um, Warren did his due diligence, and the companies that he buys just tend to last and do really good. So, and also Berkshire sitting on $304 billion of cash. That probably doesn't hurt either. Amazon. Amazon is one of those ones that we also see as it's not going anywhere, like Netflix, also not going anywhere. So just kind of watch out for that for a buy. It's getting back. It's getting down to the 3 ATR range, but it is on the list today as a buy. Setting up for a squeeze too, mind you, over the last 2 days. I don't know why over the last 2 days. Very wide range, really. But if we get a buy reversion to the mean, could be potentially in play. ABBV. What can we say about ABV? Excuse me. Um, Definitely triggered here. One, two, three on the fourth day. Boom. Definitely trigger. Your risk is defined by respecting all your buyers. It's the lowest guy there in an uptrend. What would their target? What would our target potentially be? Highs almost 3 ATR, whichever one comes first. But watch our earnings is on the horizon. I think we pretty much covered most of the in plays. Here, I think we might need to get new kids on the block. Let's see. Yeah, we pretty much nailed these two. So you guys pretty much have, the main deal of what's kind of going on here. Market's going to open in essentially 7 minutes, but that's pretty much what I got for you guys. I would say happy hunting, but kind of key in on what we talked about earlier today is that the market has the potential for a V-shaped recovery. Doesn't mean it has to. I'm completely expecting it to sell off to 3 ATR. I'm actually happy that things kind of sold off at the time that they did because we were exiting a lot of our positions around here, um, exiting a lot of our positions around here, and rolling a lot of our stuff up here. We actually closed that last one after the major drop, and then so we've actually traded this relatively extremely well. Essential buy, roll one, roll four, excuse me, taking a lot of profits off the table. This paying for well above the initial investment, whatever we paid for that contract. So I was really loving, the beginning of the year, this November, December rally, and then how we traded a lot of stocks at the beginning of the year as well. We've been doing really, really good, crushing it. This reversion to the mean also absolutely nailed that. Got out at the right time. We'll actually bring that to the front of the classroom on the day. Um, we kind of bring these to the front of the classroom to let you guys know the system is very repeatable and it's very tradable. So if we bring it to market, you actually like it, then kind of our price point is for the newest person, right? It's for the newest individual to kind of get your feet wet as regards to swing trading. From what we have found is extremely helpful. If you guys notice, this is a play, right? It's been selling off, selling off, selling off. Now, if you notice on all these outsized candles, there hasn't really been a break of high. You get this one, it's not really, it's not really a break. It kind of peekaboos and then opens here and then sells off. That same thing. Red outsized candle doesn't really break the high, doesn't really break the high, doesn't really break the high, and then the one time it breaks the high, you at least get a move back to reversion to the mean. That's why we wait for the trigger. We just let the market tell us what's going on, who's off sides. If there's a lot of people that are off sides, that has the potential to rip, right? Rips to the mean, everyone takes a break, and then wham, continues. By that time, because it's the first time of danger, where are we? We're already out. We're already out. And almost to the point where we almost just nailed that high. Like it was insane. I told my partner, I was like, man, this is insane. Like we just nailed that high almost in the cash session, right? In the aftermarket, it went a little higher, but since then it opened at around a little lower than what we sold it at. So we pretty much rally wise nailed that, like absolutely crushed it. And I was like, man, that's pretty cool. I'm glad you guys got to see that. And we talked about that reversion to the main trade. We've been talking about the market sell off and the opportunity potentially for a V-shaped recovery. So look at the Qs, look at the indices, find your wish list, some really good companies are going to be around. And if you have some extra money, take some other risk, right? Got 3 minutes on the market. I think Veru is something that we're looking at as well. Really, really cheap. But normally I don't like to talk about the super cheap stuff, but I do think this is worth bringing up. Those company potentially could be have a game changing product. Everyone knows about Ozempic, but nobody knows. Well, everyone knows about Ozempic, the weight loss drug. But the problem with Ozempic is it also degrades not just fat but muscle mass. And so for those people who just want to target fat, Ozempic really doesn't do that. It does help you lose weight pretty good, but you're going to lose the best of both worlds, the fat and the muscle. Where this one is concentrating, you do lose about 0.9% of muscle, but you lose the rest in fat. So you're not, it's not like this, well balanced. It's we're targeting specifically the fat. And that's why I went on in and want to take a buy. Price target could be raised to around $2 there. That's what I think Moody's or somebody said that this product could do, which is totally within the realm of possibility, right? When you look at this right here, where the gap is, definitely could target that. So we'll put the alert there for this one. But yeah, buy the rumor and sell the news. So the rumor is that they're developing this drug and it's cheap. And I'm like, why not? If it works out, awesome. Happy hunting, guys. MC Fire out. Let's get to it. Have a good day.